Here we are, ladies and gentlemen, second episode of the Exit Liquidity podcast brought to you by DeFi Daddy and DeFi Senpai. We are here, December 30th, 2024. We work downtown Vancouver. What's going on, CJ?
Things are good. Yeah. Getting ready for the end of the year. And markets they pulled back a little bit. Things are looking a bit intense at the moment. Let's give your market rundown.
Who could have seen that coming? Last episode, if you tuned in, we were talking about the honeymoon phase being over and the probability of a local top being set. Bitcoin did hit 108,000 US dollars per coin, which is valued at about 280,000 Canadian, our local monopoly money. But it does appear that the honeymoon phase the markets have been enjoying ahead of a Donald Trump inauguration has come to an end, and we got a sleepy end to 2024.
Things have definitely took a turn for the worse in the past 1 or 2 weeks, but overall, still somewhat optimistic. Short-term market outlook, though, what do you think? Are we heading lower?
Yeah, so one thing that I would advise to any viewers, this is financial advice, is just don't zoom out. Because if you zoom out on Bitcoin chart, you'll realize that there is no structure between 74,000 and 90,000. So what I will say is if we lose about 88 to 90, prepare, because you will be having ice cubes for dinner and sleep for dessert, because poverty will be here. So chat, I want to make it crystal clear, if Bitcoin doesn't hold above $88,000, things are going to get a lot worse, because it is a no man's land between that and $74,000, which is about 20% down.
For real. And if Bitcoin is going down to 74 or 80,000, then altcoins are getting absolutely smashed.
Yeah, 20% markdown on Bitcoin will probably mean most alts take about a 50% haircut.
I don't think I'm ready for Ethereum to go back to 2K, but
yeah, I mean, realistically, that would be a pragmatic price target, like 2,400, something like that. So
just erase the entire gains it made this entire bull run.
Exactly. Ethereum, is it the Litecoin of this?
It feels like the XRP of the cycle, and that really pains me to say it. It might just skip out of this bull run entirely.
Why do you think that is? I'm curious. What are your thoughts? Why is Ethereum underperforming?
That's a very good point. I think that L2s have performed what's called a vampire attack, where the foundation has really pushed a lot of the users onto these L2s. And as a result, you've seen this fragmentation of liquidity and a lot of the trading, a lot of things that were really positive for Ethereum in the last 2 cycles. Yeah, they've just pushed their users off the chain. And we're seeing other cryptos like Solana and Hyperliquid become the new DeFi centers just because it's faster transactions, cheaper transactions. And I think those were the fundamentals that were really backing the price of Ethereum.
Yeah, I think that fragmenting of liquidity is an important concept because, for example, if you look at Polygon Matic, they have Polymarket. Mm-hmm. That is the only reason to use that chain. If you look at Arbitrum, they have really good DeFi products like Hyperliquid or like GMX. If you look at Base, that's where all the meme coins are happening. That's where the AI agents are happening. And so Ethereum has done a really good job fucking over its ideal users because fees are way too expensive. And the only reason to really own Ethereum is to bridge it to a layer 2, where you go do other fun stuff with it. And so there is no set date for sharding. Proto-sharding happened, which is what made L2s way more efficient and way more user-friendly. But in terms of Ethereum mainnet, there's no real reason to be on there. Retail can't afford $50 swaps. That's where we're at currently, let alone where we will be during that peak euphoria. I remember last cycle, I paid $700 for a Uniswap transaction.
Dude, do you remember the other, was it Other Worlds, the Bored Ape?
Oh, where it shut down the ETH chain?
I think I spent an ETH trying to mint those things.
Yeah. There's no reason to be on ETH when monolithic blockchains like Solana exist that are so much more user-friendly, so much faster. Yeah, it's centralized, but retail doesn't care about centralization. Retail doesn't care if the nodes are distributed. Retail cares about user experience, and I think that's a major theme so far in this bull market with the rise of Solana and the prevalence of L2s is they don't care about centralization or lack of it. They just want a good experience.
Yeah, absolutely. I went to a local crypto meetup here in Vancouver, and I met someone who was just getting into crypto, and they explained to me that they did their first transaction on a decentralized exchange, and it was on Solana. And that absolutely blew my mind, that they'd skipped ETH and this platform that had onboarded our generation, and they went straight to Sol.
Yeah, I also think that it's very much like a culture movement. I think if you look at the people who are entering the crypto sphere, maybe it's people in high school, university age. They're detracted from Ethereum because it's too expensive. They're pushed towards Solana because it's more accessible. And I think it's like the old heads, if you're familiar with that term. The old heads use Ethereum while the new generation, like the sleek tech of Solana. And I think that's important to think about because last cycle there was probably similar ideologies around Litecoin, where it's like, oh, the old heads use it because it's like Bitcoin but cheaper. But now people are saying Solana is the new Ethereum, it's going to flip it, et cetera, et cetera. And so I think it's important to be cognizant of these things because the paradigm shifts are really important because attention follows money.
Yeah, yeah. And in crypto, like you really have to follow these trends fast because the money moves quickly.
Money moves quick. You can get rugged on Pump.Fun faster than you can say the alphabet.
The one saving grace for Ethereum is that they do have the ETF out, and we have seen some flows come into it. It's increased a little bit. I've seen some pretty solid days where, you know, the BlackRock ETH ETF has had like over 50 million in net inflows, which is an improvement from when it first launched and where it was completely dead, right?
Yeah, I agree. There's been some days even where Bitcoin has experienced a net outflow. December 26th, fact check me if I'm wrong, but December 26th, there was a net outflow for Bitcoin, but there was a net inflow for the Ethereum ETF. So people were bidding Ethereum and they were selling Bitcoin. And one thing that I think is really important to recognize when talking about these ETFs is traditional finance likes to buy momentum, right? Then object in motion will stay in motion. And so I think if ETH does wake up, then I think traditional finance will be much more warmed up to this idea because they don't have to pay $50 to buy ETH. They just have to pay their trading fee with whatever broker they use. And so if Ethereum gains some momentum, traditional finance will bid it up very hard. And the entire ecosystem behind it, obviously that's going to be where you capture the most alpha.
Yeah. And we have seen some like NFTs also pick up in value, and all the blue chip NFTs are on Ethereum. So I wonder if that could maybe keep the price up a bit.
Yeah, definitely. I mean, everyone recognizes CryptoPunks, MeLadies, Pudgy Penguins, of course. Those are definitely a source of Ethereum beta. And then when you look at other sources like ETHDeFi, Aave's been doing really well. Or one of my favorites, I think we talked about it last podcast, was Athena Labs, ENA.
Yeah.
Super fascinating project. And so it's not really a term, but what I'm calling it is like liquidity theory, is when a layer one, like Ethereum, starts to do really well, that is the rising ocean, but you're going to capture the most alpha looking for the boats in that ocean, right? The ocean becomes more frothy, ETH goes up in value, but you're going to get the most ROI looking past ETH and into its ecosystem. And so DeFi, obviously a big hitter, NFTs, meme coins. But who's trading ETH meme coins these days?
It's just too expensive.
Yeah. What? There's SPX 6900, who Murad thinks is going to flip the stock market. There's MOG.
It's hard. Oh, you got Pepe.
Oh yeah, true. Pepe. Pepe is good. Pepe is good ETH beta.
Yeah.
Pepe is good. We like the frog. Another source of Ethereum beta that has been the hot topic again. We talked about it last podcast. Is Hyperliquid.
Yes. Yeah, Hyperliquid's been one of the best trades in the month of December.
100%. I think when we talked about it last time, it was trading at about $8-9. A couple of days ago, it did go up to $36. Congratulations to all the Hyperliquid holders, investors, and traders out there.
Yeah, and
that's really where the alpha is currently.
Infamously, I did farm that airdrop, and if you've been subscribed to our email list, you will have access to the airdrop sheet. Hyperliquid was on it, but I did not sign the terms and conditions, and it's now worth like $60,000 or $70,000 that I missed out on.
Oh my God! What a fumble!
Yeah, that was really unfortunate. I think there will be a second round of airdrops for Hyperliquid. So yeah, if people want to like sign up and use that exchange, like I think there is still an opportunity to get access.
Yeah, I think there's going to be 3 more rounds of airdrops. I don't know. Nobody in crypto has ever taken the approach of, hey, let's make a project and to market it, we're just going to make everyone really fucking rich.
Yeah.
Because that is exactly what Hyperliquid has done. They airdropped 30% of the supply. Their market cap is around, last time I looked, 10 billion circulating. So they did a $3 billion airdrop. And that is the best marketing a project could ever have. Just make their community rich.
Totally.
They'll sing it from the mountaintops about how good this protocol is.
Yeah, I think it's also really important to understand that like they didn't airdrop any tokens to like exchanges for listings. And so like you can only really buy Hyper on so few centralized exchanges at the moment. They need to go to the actual Hyper exchange to pick up spot Hyper if they want to list it. And that's providing so much buy pressure.
I agree. I think the way Hype has done it is formed a moat. They didn't sell their soul to venture capitalists. There's no private funding. They built it from the ground up. They owe anyone nothing. And so if an exchange like Binance or Bybit want to list it, well, cool, you go buy it off the open market. That is the only way that they can offer Hype to their customers. And Hype is like, I think, top 20 crypto assets in the world. Yeah. Obviously, the exchanges are going to want a piece of that pie so they can farm fees off their users. Last time I looked, the only exchange that offered Hyperliquid from a centralized perspective was KuCoin.
Yeah.
Other than that, you're going to have to bridge to Arbitrum. You're going to have to import it into the Hyperliquid app and buy it just like everyone else.
But it hasn't been like all like sunshine and rainbows for Hype. There has been some FUD recently. Allegedly, wallets connected to North Korean hackers have started using the Hyperliquid exchange. It was recorded they got liquidated on like a $500,000 long on Ethereum on Hype. Some people are speculating that this is them testing out the platform for any potential, issues so they could try to drain the $2 billion in USDC stables that are on that platform. But we'll see.
Yeah, there was a lot of good and bad information circulating on Twitter about that. The Lazarus Group, I believe, is what the North Korean hackers go by, poking around. Yeah, they got liquidated for like $500,000 in like 30 seconds. And it was like, well, are they trading or are they testing? I guess we'll never know. Regardless, they definitely want more money for the nuclear arms program. I think there's some interesting fallbacks for safety here, though, because the only assets that you can take out of Hyperliquid is USDC. USDC is a stablecoin issued by Circle, and they kind of maintain sovereignty over how it is overseen. So freezing wallets, blocking spends, stuff like that, they retain that permission. And so in the event that there was a Hyperliquid exploit, I think Circle would be a good fallback for freezing those funds and making sure that the users that were affected were made whole. I think that's something that was talked about on Twitter, but also Arbitrum Network, which is what Hyperliquid is currently hosted on, also has the same capability in the sense of rolling the chain back and protecting their users. So
yeah, one of the concerns is just how fast they'll actually be able to do this. And if the North Koreans do hack it, it's like they're going to do it on a weekend when USDC Circle are not really paying attention. And if they can like drain those funds and then transfer it into ETH and take it off the Arbitrum blockchain fast enough, it's like that's going to be a lot harder to roll back.
Yeah, agreed. There's definitely some systemic risk with the centralized architecture of Hyperliquid, right? There's only 4 validators.
Yeah, I mean, that's how they get such fast
transactions. Right? You love the Hyperliquid speed, and it comes at a cost of centralization, and with centralization comes security risks. So me personally, I'm bullish on Hyperliquid. I recognize the risk, but at the end of the day, the North Koreans, they're pretty savvy. They've been behind some of the largest hacks in crypto's history, and whether they're trading or they're testing, they're certainly on Hyperliquid.
Yeah, absolutely. There's some really exciting Hyperliquid projects in the ecosystem that are coming up. One of them that I like is HFund. It's the pump fund version for Hyperliquid, where it's like after a token launches on their Dutch auction, all the liquidity gets migrated to the Hyperliquid DEX. But there's actually a bidding process. They only list, 1 token daily?
Yeah, from my understanding, it's 1 token a day, where basically they are buying they're buying the ticker for it to get transferred to Hyperliquid. So there's kind of 2 markets here. There's Hyperfund, where it's just like Pump.Fund. It's like an internal market where the tokens don't really exist. And then once it has formed out the liquidity, they can bid for a spot on the Hyperliquid centralized exchange, on the Hyperliquid exchange. And so I think this is done for 2 reasons. Number one, it kind of prevents there from being thousands, if not millions of tokens like we currently have on Radium, because Radium's an absolute graveyard of Pump.Fund graduates. And then the other thing is when there's this auctioning system to get on Hyperliquid, that is an additional source of revenue for the protocol. And then that money is used to add to the insurance fund for Hyperliquid. So it's kind of an additional revenue source, token buybacks through the insurance fund, and just kind of feeds the flywheel of the Hyperliquid ecosystem in a reasonable manner. I think 1 token a day is a good place to start.
I think so too.
Because, Pump.Fun, there's been days where there's been 90,000 made in a single day, and what are you even going to do with that many tokens? Solana is an absolute graveyard of them. So I think this is a much more pragmatic approach where I guess it could be summarized as quantity over quality.
I have noticed that the longevity of these Hyperliquid meme coins, it's much better than on Solana. On Solana, you can have tokens that go to 10 mil in literally a day and they'll be back below 100K in 24 hours.
There's a really interesting Dune Analytics dashboard that tracks the amount of coins made on Pump.Fun, the amount of coins that made it to Radium, and then it quantizes all of this with their market cap after 1 day, after 7 days, after 30 days. And so the last time I looked, over a week time frame, there was 30,000 tokens made, and 2 of them had a market cap higher than 10 million.
Wow.
2 of them.
Yeah. That's not a very good success rate.
No, and so I also think that kind of speaks of the approach that people take to Solana meme coins. Me personally, I stay away from pumped up funds as much as I can because statistically, you are likely to fail.
Yeah.
Statistically, if you look at those 20,000 coins and 2 of them have a market cap of higher than 10 mil, you are not likely to pick those, right? And so either you have some kind of edge, you have some kind of insider knowledge, whatever it may be, statistically, the odds are not in your favor.
Yeah, I mean, you can hit literally 100x every 2 weeks and still lose all your money just because you're 0xing on the other 50 coins you're aping into.
Yeah, exactly. And so, I don't know. The Pump.Fun trenches are tiring. It's fun. And yeah, you might ride a coin from 50K market cap to 200K market cap and capture that 4x. But again, you're just you're capturing such a small subset of a larger failing system.
Totally. Yeah, in my experience, the times to be on things like Pump.Fun are when Solana is pumping. You can see the success rate of projects graduating off Pump.Fun being way higher at that time. The pumps just last longer as well. But when you're in a down market like this, or at least the market's pulling back, the success rate is really low. The meme coins just don't pump as high, and it's just you're going to lose your money if you just are doing this blindly.
Yeah, it kind of ties back to what I mentioned 5 minutes ago about liquidity theory. It's when Solana does well, its ecosystem is frothier. That's when you want to be in the trenches. When Solana is pulling back like it has been, it's currently 185 or something like that, the ecosystem is not as frothy, and on-chain terrorists are just about everywhere you look, getting rug pulled left and right.
Yeah, the only people making money in those situations are the guys launching it or best friends with the dev.
Exactly, or the people using dog whiff tools for legal reasons. I have never used that software.
I don't know what that is, but I'll have to look into it.
So I think it's very much a context-dependent decision. Do I get in the trenches, yes or no? And I think the best time to be on chain is when you're in that frothy environment and the reference layer 1, like Solana, is doing particularly well because the wealth effect. It's oh, I'm making money with Solana. Let's go on chain and spend it to try and make even more money. So I think it's something to be cognizant of when you're discussing on-chain trading, meme coins, Pump.Fun is what is the context? Is the market going up? Is the market going down? Because that alone can be such a determinant of your success.
Totally. DeFi Daddy, when do you think will be the time to kind of go long in this market again? Do you think that the Trump honeymoon period is now kind of over? Are we going to see a lull to start 2025, or are you just pedal to the metal?
I mean, I'm disgustingly long. I can hear my bloodline cheering me on from outer space. But what I will say is similar to last podcast, the honeymoon phase is over. The market is taking a breather, and I think heading towards mid-late January, roughly 3 weeks from the time of recording, is when things will heat back up. That's the Donald Trump inauguration. The crypto council will be formed. New Gary Gensler replacement comes January 7th, who is Paul Atkins, who's an advisor to Securitize.
Yes, yeah.
And Securitize works closely with Ondo, so the U.S. government's about to tokenize everything under the sun.
Yeah.
And I think heading into January, February, March is when the markets will heat back up again. If you look at historical monthly average returns, specifically for Ethereum, Ethereum's best months of the year are January, February, March, April, and May is the largest average monthly return. And so I think Q1, bullish, Q2, probably half of it will be bullish. I think sell in May and go away is very cliche, but I think that's kind of what we're looking at for the coming up months. So realistically, survive. Don't get liquidated. You don't get to play in the casino if you've lost all your money.
Absolutely. Yeah, I think that's January, February, March could be pretty bullish. I think Bitcoin might reach like 120 to 140K. That's like best case scenario. But then we do see a lull period before we kind of ramp up back in like August 2025 as we get into October, which is when I kind of see the markets really peaking, Bitcoin maybe 180, 200K as a top.
Yeah, I agree. I think in terms of like macro cycle dynamics, I think it's going to be pretty similar to last cycle where we set a high in the springtime, a lull for the summer, maybe heading into the fall, things pick back up. Equities are due for a very large correction. Will it happen? I don't know. But what if I had to guess is that the winter and the springtime will be exciting. The summer and the fall will be kind of boring, but we are going to kind of have that like two-leg style again.
Yeah.
We set the high, liquidate the noobs, run it back.
Yeah, totally. The good news is that although we're entering this final quarter of this bull leg, this bull run, this is where the most money is being made as well.
Exactly. I mean, I say it on streams all the time, and I'm always flamed when I say it. The bull market's halfway done.
Oh, over halfway done.
We've been going up only from 2023 until now.
Yeah.
January 1st, 2023, Bitcoin was at like $18,000. We have not stopped going up from then until now. We had a consolidation from like May until October, right? Where we set the high in March and then we just chop, but we're far above that high now. And so it's an unfortunate truth, but for people watching this, I don't think it's a good idea to get infatuated with the idea the bull market's just starting. The most exciting portion of the bull market is starting, but we are very far into a bull market. When you see the simple fact that Bitcoin is up, what would that be? Like almost 6x from where it was January 1st, 2023. If that's not a bull market, I don't know what is.
Yeah, we're definitely reaching the stages of euphoria. We're at the point where I think I saw like a stat where it was like every single Bitcoin buy was in the money when, well, obviously that makes sense. It was at like 106K. But that tells you something for sure.
Yeah, and I think if you look at who is like kind of fueling the bull run, Michael Saylor, obviously the mad lad. He sold more equity this morning actually, and he wants to do a 10-to-1 stock split.
Yes.
So he has more equity to sell. But if you look at who is fueling this, it's traditional finance, because retail is like, they're broke, right? Retail, this is a very different bull run. And I think it's really important for people to think about this. If you have a concise ideology that this bull run is going to be more explosive, then you need to be able to explain it. Because in 2021, we had the cheapest debt ever.
Yes.
People were getting stimmies. You were told to stay inside. Interest rates were at 0%. That bull run was crazy for those exact reasons. And so now in 2024 and 2025, you need to have a concise reason. Why is this bull market going to be better than the last?
Yeah.
Retail is broke. Interest rates are proportionally way higher. So who's going to cause it? It's traditional finance.
Yeah, I think people really underestimate how much the stimmies actually impacted the last bull market. Yeah, I mean, at least here in Canada, like the stimmies weren't like outrageous, but in the States, like hearing what some of my cousins were getting for just like staying at home, it was a lot of money. They were getting like full like 50K salaries just to chill at home and gamble on like meme coins and buy NFTs.
Yeah, exactly, right? So the economic context is fundamentally different. And because you have to kind of look at where the money flow is coming from, the money is going to flow into Bitcoin and Ethereum. And judging by the sentiment on Twitter and other social media platforms, it really seems like nobody owns Bitcoin.
Yeah, people are chronically underexposed to Bitcoin, which is hilarious.
Right? It's like routine. I'm like, do you guys hold none of this? Everyone seems like up to their tits in fucking altcoins, but they don't own any Bitcoin. No wonder the sentiment is so awful. You're probably down 40% in a week.
Yeah. I think we actually spoke about like because I watch your videos and I'm sure you watch mine, but we like definitely touched on that. Like way before this cycle even started. The dynamic of this one is going to be different just because of that ETF, and that the money is going to flow into the ETFs, and that money's going to stay there. It's not going to bleed into all these altcoins the same way it has in previous cycles, and that's why we've seen dominance on the Bitcoin D chart just go up and kind of stay there around like 60 to 50%.
Yeah, like 2 weeks ago, Bitcoin dominance set a 1,330-day high.
Crazy.
And it's just forming this series of higher highs and higher lows that is painful for altcoin investors because they're waiting for the altcoin season. But I do not know of a single place on planet Earth where I can trade my Bitcoin ETF for an altcoin using a decentralized exchange. Let me know if I'm wrong, chat, but I don't know where I can swap IBIT for some kind of degen meme coin play because that infrastructure just can't exist. It won't exist. And so that capital concentration is something that I wrote about in an ebook February 2024, and I did a 10-part video series talking about how Bitcoin is going to run away from the rest of the crypto market in this context of hyper Bitcoinization, because that is where the money is coming from. It's not coming from retail, it's coming from traditional finance that has endless pockets for risk.
So there are other ETFs like in the works. One of them is the Solana ETF, which the deadlines are coming up. I believe it's like 3 days after Gary Gensler resigns.
Yeah, you can tell all the people that applied for the Solana ETFs applied for like 1 to 10 days after Gary Gensler's resignation. It's like, you are crafty.
Yeah.
Because obviously, Gary Gensler, pretty anti-crypto stance, not a big fan of Solana, but new commissioner Paul Atkins could approve those. And what I think would be particularly compelling, specifically for the bull case for a Solana ETF, would be native staking dividends.
Yes. Yeah, if they get that, as well as Ethereum, like that could definitely spark a run in those altcoin markets. But we'll see.
It would be the same idea where we talked about where the reference layer 1 does really well, so there would be some liquidity overflow. But if you were to tell a traditional financer that, hey, you can buy this crypto ETF, you're going to get a 7% dividend a year. And then you can also add a covered call on top of that. So, for example, in Canada, we have these ETFs. I'm going to pull it up because I feel like the viewers won't actually believe this, but the covered call ETF in Canada for Ethereum, as of right now, offers, last time I looked, it was 15% yield.
Whoa.
15%. And so that is just generated through selling covered calls using the Ethereum ETF. It's offered through Purpose, and as of right now, the yield is 12.6%.
Okay.
So if you were to slap that kind of covered call instrumentation on top of a Solana ETF, well, you're looking at 7% staking reward, plus, let's say, 15% covered call reward, 22% a year for holding a risk-on asset. Like that alone makes it so appetizing for traditional finance cronies, both in terms of the risk perspective, but also in terms of the passive income perspective, because they don't have to worry about self-custody and they would get monthly dividends amounting to just over 1.5%.
Yeah, that's a very bullish case to hold those.
Right? Yeah. So the covered call ETFs do have dampened volatility. So for example, if ETH were to move up 100%, the covered call would probably move about 60, 70%. Same to the downside though. So if ETH fell 50%, the covered call ETF would probably only fall like 30, 35.
And you have to look at like the trading volume and liquidity on those as well.
Yeah.
It seemed like the chart was very, stagnant.
Yeah, exactly. The Canadian ETF market is not very robust, but that's why we got the good friends down south to beefing up the liquidity, assuming these products get approved. There is one in the US, I think it's called BITO. It is a covered call structure that offers nice yield.
Yeah. Let's like jump back to MicroStrategy for a second, because there's been a lot of FUD, particularly around these bonds and like the 10-to-1 structure that he's doing for increasing the share count. So he's doing a split as well though, right?
Yeah, so my understanding is he wants to do a split, because right now MicroStrategy is priced in 3 digits, like I don't know, it's $140, and he wants to do a 10-to-1 split to reprice it to $14, let's say, in this circumstance. It's a smaller number, it's more approachable for some investors because not all brokers have fractionalized shares.
Yeah.
So for example, if you trade through like Robinhood or Wealthsimple, if you're Canadian, you can buy half a share.
Yeah.
but most places don't let you do that. So by bringing down the target price, it makes it more accessible for retail investors. And then that also gives them a higher amount of raw shares to sell.
Oh, yeah, absolutely. Yeah. I mean, we've seen Apple do this same playbook so many times. They'll do like a stock split from like when it was $200 down to 20, and it brings in so many more retail traders because all of a sudden they think like, oh, I can have like 100 shares of Apple, and you just feel richer, even though like, yeah, the underlying equity, your ownership of the company hasn't changed a bit, but it adds so much value to the company.
Right? It's that unit bias theory.
Yeah.
The same thing's prevalent in meme coins. It's like, well, do I want one Bitcoin or do I want 10 billion retardio?
The amount of TikTok videos I've watched where it's like, if this goes to $1, I'm gonna be a millionaire because they have like 1 million retardio.
Yeah, that unit bias is present in both crypto and equity markets, but kind of for different reasons.
You think so?
I think so. Because in crypto, it's like, well, when this goes to $1, and in the equities market, it's like, oh, I can just buy more Apple stock.
You know, if Berkshire Hathaway did a split, I'm sure a lot more people would own that.
The Class A's?
Yeah.
Yeah, if you own Berk Class A, you are immediately in like the top 0.01%. You also get invited to the shareholder conference meeting. Did you know that? If you own Class A, you get a free ticket to go.
Yeah. It's like a whole like adult circus.
Yeah, it's like an adult circus. You get like free Dairy Queen, free McDonald's,
free underwear from Fruit of the Loom.
Yeah, pretty much all of their subsidiary companies are there handing out merch left and right, directed by Warren Buffett. So one trend that's been pretty popular across the cryptocurrency ecosystem is artificial intelligence agents. But I want to zoom out because it kind of feels like there's a sequential timeline here. Artificial intelligence is kind of the cutting edge of developer work. That is where the hardest work is done, and that is where the most value is being created. And in the cryptocurrency sphere, there's been a relatively new phenomenon, AI agents. And this has brought in an entirely new talent pool of people interested in crypto. Artificial intelligence developers are entering the cryptocurrency sphere because these AI agents are kind of near the cutting edge of what is possible with the existing technology. And so something that I've noticed with a lot of new projects launching is their dev teams are absolutely cracked. They're doing things that people didn't even think was possible. And so I think it's a really interesting phenomenon to see crypto catching mind share from people in the AI space and then entering crypto because it's like, oh, I'm really passionate about AI, but now AI can interact with crypto as an AI agent, so I'm just going to come hang out here.
Yeah, I think there's like such a beautiful relationship between AI agents and crypto because I mean, crypto is what these AI agents are going to use to transact and actually do, you know, real world impact stuff. I mean, there's one project in particular that I like right now. It's called Hey Anon by a dev called named Daniel Siesta.
I have no idea what his name is. It's his Twitter handle is Daniel E. Sesta. So I have no idea if his name is Danielle Sesta or Daniel Sesta.
I thought it was a girl for the longest time.
Right? Daniel, if you're reading this, or if you're listening to this, rather, what is the E in the middle of your Twitter handle? Are you Danielle? Are you Daniel? Regardless, he is the, or I guess was, the head chef behind Time Wonderland.
Yeah, who can forget? That project in its heyday was in at $2 billion, I believe.
Yeah.
Made a lot of people a lot of money.
That was one of the greatest Ponzi's of last cycle. Buy Time Wonderland, stake your Time Wonderland, grab a piece of memo, wrap your memo. Regardless, you were earning like a couple percentage points a day. The APR was over like, I think 5,000, 8,000%. Mm-hmm. And that was a great Ponzi from last cycle. And let's call him Daniel, is cooking up a new one on the Sonic network.
Yeah. Yeah, and the project's currently only valued, I believe, around like 25 to 30 mil. So it's still like quite affordable for the average person to get in, considering the upside of what he's building. It's like a whole agentic, decentralized infrastructure where I guess you'll be able to communicate with these agents and they'll be able to do things like on-chain arbitrage. They're connected to centralized exchanges as well, so you can input like your user API keys if you want to do trades for you. It sounds really like he's tackling a lot, and if he actually delivers on this, like, it's gonna be worth much more than 30 million in my opinion.
Yeah, this has absolutely huge potential. It's kind of like a on-chain portfolio manager.
Yeah.
So I don't have access to the product yet. I have been talking to Daniel, though, and he said he's going to onboard me today. But based on my understanding, you would be able to ask the AI agent to generate yield on stablecoins for you, as an example. So, hey, I have 1,000 USDC. Your job is to generate as much yield as possible. And so maybe it starts on the Sonic network, bridges from Sonic to Base, finds an attractive LP, locks it in a vault, and generates the yield. And then whenever you want, you can just be like, okay, unwind that and bring it back to Sonic. And it can bridge, it can stake, it can vault your LP, and take all of these autonomous actions on chain, acting on your behalf as basically a portfolio manager. And like Senpai said, it could be connected even to a centralized exchange. So you could capitalize on stuff like delta neutral funding rate arbitrage. And so I think there's a lot of potential here in terms of what it could represent. But there's one specific tweet from Daniel where people were like, when Ponzi, when crazy APR, when Time Wonderland APR.
Yeah.
And his reply was very simple. He's like, if we do what we're trying to do, this will be 100 times better.
Wow.
And so there's no like confirmation as to how this Hey Anon project is going to evolve into a Ponzi, but I have some speculations. Number one, I think it is going to be given a large pool of capital to work with.
Okay.
I think it is going to be given a lump sum, and this agent's job is going to be to manage that capital, to generate the highest yield, to pay out the people who stake their Anon.
Okay.
And so by staking your Anon, I think you are going to get a claim on the decentralized AI agent hedge fund.
You're like an LP holder.
Yeah, exactly. A limited partner of a hedge fund, basically, is potentially what it could evolve into. And so I think there's kind of two facets here. Number one, you interact with the AI agent and you get it to take actions. Number two, potentially, this is complete speculation, is that there's going to be some kind of staking mechanism for Anon where you are getting dividends, for lack of a better word, sorry, security lawyers, from the central pool of liquidity that's being managed. It's on the Sonic network. Sonic network we're both quite bullish on. Do you want to give a little preamble on what's going on with Sonic?
Yeah, I mean, lately, like the price has taken a bit of a hit. Phantom is like an older project back from like 2017. They raised a ton of money and they had like a decent amount of success in the last couple cycles, but they're doing a full rebrand. They're calling their new blockchain Sonic. It's marketing themselves as like the fastest blockchain out there with the cheapest transactions. They're bringing in like a whole new infrastructure, but that rebranding is going on right now, and all the new exchanges are announcing when they're doing this migration from FTM to Sonic. I believe on the 16th, it's gonna be listed on Binance. And of course, like these migrations are never like they're never like foolproof and like perfect. So it is getting a little messy. And I think some people are selling their like Phantom because they don't want to bother to actually bridge it over, because bridging's not the easiest thing for a lot of retail folk. But it seems like it is coming along, and I think when it does like fully pick up steam mid-January, I think that there's huge upside potential. And we know that they've been spending a ton of money on KOL marketing, and so I feel like this is kind of the time when people are just accumulating. But when that all does come together, like there should be a really good push.
I agree. I think it's the kind of thing that just like people didn't know they would be on Avalanche last cycle, people don't know they'll be on Sonic this cycle. It's got below 1 second finality, so your transactions are all looking at like half a second finality, which is faster than Solana. It can do more than 10,000 transactions a second. From the tech perspective, it is very impressive. But one thing that I think is very bullish for Sonic is the developer incentives. So they have done developer incentives in a completely new way that is virtually never been done in the world of crypto. So traditionally, foundations, labs, whatever you want to call them, come up with dev incentives where it's like, hey, here is a $500,000 grant to come build in our ecosystem. You can take some of the money, use some money for liquidity, just come build in our ecosystem. And traditionally, that has been the best way to incentivize devs. Because first you need devs who bring users, who bring capital. It's like a very stepwise progression. But what Sonic has done that is very different is they are sharing network rewards with developers. So 90% of all network rewards go to developers.
Yeah.
So if a developer launches an application or a token, they are entitled to 90% of the fees generated associated with that. So for context, if SHIB was deployed on Sonic, the deployer would have made over 90 million US dollars.
Yeah.
Just from like swaps.
And that money can go towards things like marketing, getting listed on centralized exchanges.
Yeah, exactly, right? Broad purpose business development, marketing, exchanges. And that is value generated in excess of selling. Because traditionally, the SHIB Foundation or whoever runs that project would have to sell tokens to fund the business. But now they just have passive income. And so I think looking forward into 2025, Sonic has done a really good job aligning developers, the community, and the network, which really hasn't been done before. Usually you kind of have to pick two sides of that metaphorical triangle. But Sonic, with this, let's call it revenue sharing model, has done a really good job aligning it. And I think it's only a matter of time until the broader market catches on. For example, Aave passed a vote. They reached 100% approval within the first day if they should bridge to Sonic.
Really? Wow.
Because they instantly make so much more money.
Yeah.
So now Aave is going to bridge to Sonic, and Aave's revenue is going to shoot through the roof because now they're getting so much more money than they'd otherwise be entitled to on any other network.
Absolutely. They're incentivized to push people to do DeFi on Sonic.
Exactly. And so every protocol is going to have that moment of truth. Should we integrate Sonic? And it's going to be a no-brainer yes, because they're instantly going to be making thousands of percentage more than they otherwise would. Sonic is also Ethereum virtual machine compatible, so Uniswap, Aave, Curve, Yearn, all the decentralized finance, let's call it foundation protocols. It's a no-brainer to bridge to Sonic because they're instantly going to be generating so much more revenue than they would on any other competing chain.
Yeah, absolutely. I think there's a ton of upside. Like, as a side note, I know that the foundation has a really well managed how much money they've raised.
Yeah, I think they have over 10 years of runway.
Yeah, I read somewhere that they had over 200 million in their foundation wallet in like mostly stables.
Yes, that is the big thing. If it was held in Phantom or Sonic, they're the same token, but that would be very sketchy because then you would see the foundation's effective net worth or valuation shift so dramatically. But theirs is in stable coins, which is very bullish because you know they're going to be around in 5 years. You know they can afford to be around in 10 years versus something like the Solana Foundation. Majority of their balance sheet's held in Solana.
They have to keep on selling over and over again. And
same with Ethereum, right? Yeah. The Ethereum Foundation is cheating like nobody's business, and it's because they have to keep the lights on. And so I guess that is
which is constantly a source of FUD, right? Every time you see the ETH Foundation sell, even if it's like $1 million, there's someone tweeting about it being like, look at these guys.
Exactly. And so I think from like a high level, I guess, corporate finance management perspective, Sonic has the runway. It's locked in stable coins, and you know they're going to be continuing to build over the coming years, maybe even decades.
Yeah. So that's definitely why it's one of like my like larger altcoin picks, which is still like a pretty small percentage of my portfolio. I just think that like the upside's pretty big heading into this last quarter of the bull run.
Definitely. It's on my shopping list. Anywhere between like 50 and 75 cents. I think
Man,
it's at
you
like
can
75.
get it. You can get it there. I mean, well, that means Bitcoin's down at like 80K.
Yeah, exactly, right? It's like the double-edged sword. It's like, yay, I got Phantom at 50 cents. Oh, fuck, Bitcoin's at 74. Another kind of, I guess we're talking about altcoins here. One that I'm quite bullish on is Vapor, VAPAOR. It's an AI agent play. It's out of the Hyperliquid ecosystem. If you didn't know, we are quite bullish on that. AI agent infrastructure is definitely quite a big buzzword these days. You see DAOs like AI16Z run by Degen Spartan have a market cap of 1.4, 1.5 billion in AI agent launchpad. Virtual on base, 3.6 billion, same idea, AI agent launchpad. Vapor is a Hyperliquid AI agent launchpad, currently with a market cap of about $110 million. Seems criminally undervalued compared to its competitors.
Yeah.
And there's two kind of interesting dynamics to it. Number one, if you want to make an agent, it's going to cost you Vapor, so you have to burn it in order to access the technology. Number two, when those AI agents have coins, it's going to be denominated in Vapor, so the Vapor will be locked as part of the liquidity pool, and people will have to buy Vapor in order to access the agent. So kind of deflation as well as a demand-centric focus on how that token is actually structured. You can only buy it through Hyperliquid, which obviously is a bottleneck to normies. Like you can't just download Phantom, hop on Jupyter, and punt Solana quite like you can with AI16Z. But I think as Hyperliquid continues to evolve, it's going to become more accessible and more clear on how it's actually going to be used.
Yeah, I think right now that actually is one of the biggest barriers, like to actually go on Hyperliquid, find the spot market, and then you have to click off on all. And so it's like a little bit difficult to find the Vapor token. I think that's part of the reason why it hasn't really taken off like it has yet.
I agree. I think in general, if you look at like who is in the market, like 90% of the market is probably not sophisticated enough to bridge their USDC into Arbitrum and then withdraw their USDC into the Hyperliquid ecosystem and then press the single button that says not strict list and then buy it. Like that's probably beyond, respectfully, that's probably beyond the mental comprehension of the majority of crypto. Bridges in general, we talked about this before. Bridges and using layer 2s is far beyond what most crypto retail investors are intellectually capable of.
Yeah.
And I don't mean that in a mean way. I just mean that in like they are not deep enough in the space. It's not,
there's not where your exit liquidity is going to come from.
Exactly. There's too much friction there for them to figure it out.
Yeah, so if you're getting into Vapor at these prices, like probably still quite early, I would say. Yeah,
I would say quite early. Yeah. It's definitely I don't want to say a long-term cook, but it's a cook. It's not like buy and immediately expect a 2x. It's a buy and you're betting on the Hyperliquid ecosystem, because the way that I see it is this is pretty much the purest form of Hyperliquid beta you can find. It's AI, it's in the Hyperliquid ecosystem. And for those who don't know, when you're talking about investments beta is the tendency to be correlated to but more volatile than. So for example, Radium is Solana beta, right? It's highly correlated to Solana, but you'd expect it to be more volatile than. And in this instance, Vapor is Hyperliquid beta, highly correlated to Hype, but more volatile than, i.e. more upside, more downside.
Yeah. Do you think that a lot of these agentic infrastructure projects are going to have to expand upon just being like reply bots on Twitter? Because I feel like that trope is getting pretty old very fast.
Yeah, so I agree. I think the AI agent niche became incredibly saturated super quickly. There are some funny AI run Twitter accounts. Like, did you see Charles Hoskinson?
So good. The
arguing
Roastmaster
9000?
Oh, jeez.
So a little bit of lore here. There's one called Roastmaster 9000 that is basically taught or has been trained on how to roast people in Twitter replies. And it got in an argument with Charles Hoskinson, the founder of Cardano, and he clearly had no idea this was an AI bot. It even said automated on all of his replies, and he's replying to it like it's a real human being, not realizing it is a bot designed to torment him.
Yeah, and it's just like torching him in every reply.
Yeah, it was so clear that he was like defensive, on the back foot. Absolutely amazing interaction between AIs and humans. But I agree, AI agents in their current form, where they're just a Twitter reply bot or they post content on Twitter, the use case is pretty limited.
Yeah.
There are some cool ones, like for example, Bro. It made an album on Spotify, it wrote music, it rapped it, it produced it, it published it. That's super cool.
I do wonder how much of that stuff is also a LARP, though. If there's just like some guy sitting behind it and kind of like Fugaziing as an AI agent, because it's kind of the hot thing to do right now. Like,
I agree. There was even one, I don't remember what the ticker was called, but there was an AI agent, I'll say that in quotation marks, where it was just proven to be like 5 guys in a Discord. And someone infiltrated it and saw all their conversations. And it really was just, the token went to 0 because they realized it wasn't a large language model. It was just like 5 dudes in a Discord deciding what to tweet next on this cryptic X account.
That's pretty funny.
Super funny. But I agree. AI agents, there's got to be something like a unique value proposition or something that makes them stand alone. Because the ones that are being pumped out by AI16Z or Virtuals, or even there's another popular one called Creator Bid, they're all kind of a dime a dozen. They all do the same thing. There's got to be something that separates them from the crowd.
So as of today, USDT is now delisted on European exchanges. That's because they're not complying with this new regulation called MiCA, Money in Crypto Assets. That's what it stands for. But basically, from what I understand, these exchanges basically want to document every single transaction you do with these stable coins, and so they'll know the full identity of who you're sending this money to. And that's obviously, like, if you care about privacy in crypto, that's, a huge faux pas. USDC are compliant, I believe, with this.
Yeah.
This new regulation. So, they basically are like trading your information if you are on one of these European exchanges and sending money around. This is like, I would say it's a win for USDC because they're going to take a lot of the market share. But at the same time, it's like, how many major European crypto exchanges are there? I feel like most of them are North American or Asian.
Yeah, and there was a lot of FUD saying the market was going to collapse today.
Yeah.
A lot of FUD, which is kind of baseless, but they're saying Tether is going to collapse, they're insolvent, not complying with MiCA, whatever. Great news, the market didn't collapse. Rejoice. But what I think Tether is going to do, so Tether is founded by a company called iFinex. iFinex is owned in the Cayman Islands, and iFinex also owns Bitfinex, the crypto exchange. And so if I had to guess what's going to happen is they're going to create a new corporate body that is 100% transparent that complies with their regulation. I think they're just going to make a second product and call it, like, I don't know, Euro T or something like that. Like a Eurozone Tether equivalent, but under a compliant authority. Because part of the reason why Tether is found in the hot seat so much is Tether has been audited multiple times. The problem is that Tether has never been audited by a company that's on the approved list of auditors, that's like known to like do their due diligence and like peel back the layers. And so that's the reason Tether is like deemed to be non-compliant, is auditors have said they have all their assets, but they haven't been audited by like the gold standard company, like the PwCs or the Deloittes, the KPMGs, like the North American accounting auditing firms that we know and love. And so until that happens, I think Tether is always going to kind of exist in the gray area where it gets fudded regularly, but then when the Tether printer turns on, everyone cheers because we know what happens next.
Yeah.
Right?
In your opinion, do you think that they're fully backed?
Yeah. I have no concern about Tether. I've been in crypto since 2016, and I have experienced Tether FUD since 2016. Yeah,
me neither at this point. I think that it's perfectly fine. Like, their business model makes so much sense that they wouldn't need to, have it partially backed. It's like they're making money hand over fist, just buying bonds and then issuing Tether, and they're giving almost no yield on that. With treasuries now doing 5-6%.
Exactly.
Like, they're making so much money.
It's just an arbitrage business. Tether is the most profitable company on planet Earth per employee. They're making over $5 billion a quarter.
Yeah.
Just through asset arbitrage alone. And so personally, I think they're solvent, but there's actually something else here. So Cantor Fitzgerald is an American asset management company. Mm-hmm. That is who Tether escrows their assets with.
Okay.
That is like the broker they use. Cantor Fitzgerald's CEO, I don't know if he's the founder, but I know he's the CEO, is Howard Lutnick. Howard Lutnick was just appointed to the Secretary of Commerce for the U.S. government.
Okay.
Under the Donald Trump Boys Club regime. So that means Howard Lutnick will be responsible for all of the tariffs.
Okay.
For example, in implementing economic policy from a macro trade perspective. And so I think by extrapolation, there's like a subconscious vote in Tether there. Hey, the person who holds all of Tether's assets is now involved with the U.S. government.
Yeah.
All right. There's some kind of passive, let's call it, legitness there.
I think so too.
And so I think that's something that a lot of people don't know about. Study Howard Lutnick, study Cantor Fitzgerald's relationship with iFinex, and you'll probably come to the conclusion that Tether's legit. Personally, it's a time bomb, but it's a time bomb from the perspective, when are we actually going to get to see their balance sheet in its wholeness?
Yeah, I wonder if the reason they don't want to do these audits is maybe because of history of maybe terrorist financing or something like that, where there's probably so many transactions that ran through Iran and other places which are on these lists of you're not supposed to be doing business. And I get the feeling that might be.
I think it's going to be kind of like the FTX and Binance situation. FTX engaged in criminal activity.
Mhm.
They were committing investor fraud on multiple levels. They were misappropriating user funds. FTX was engaged in criminal activity. Binance, CZ went to prison, but it wasn't for the same criminal activity. It wasn't for fraud. It wasn't for misuse of customer funds. It was for failure to comply with AML policies, Anti-Secrecy Act, etc. And so I think that is probably what Tether is concerned with. It's probably got nothing to do with their balance sheet, and it's probably got more to do with, okay, how has their platform, how has their stablecoin been used, and how have they kind of been the puppet master behind the scenes?
I see.
Is it better that we don't know? Is it better that we're in the dark? We won't know, but what I will say is the US government also kind of functionally needs Tether. When you look at who is showing up to bond auctions, stablecoin issuers are major bidders at these auctions. IFINX holds more US treasuries than Germany and Saudi Arabia, right? Wow. If you were to litigate IFINX, you know what they would do? They would sell all of those treasuries. They would collapse the global US treasury market.
Wow.
Not permanently, but they would cause major volatility as they're dumping, I think they hold over $100 billion in US treasuries.
Yeah.
That's not the kind of liquidity that can be absorbed overnight, but that is the kind of liquidity that would enter the market if they were to be like formally shut down.
Yeah, absolutely.
And so Tether is showing up and buying. Tether holds more than G7 countries. So what is the US government going to do? Their hands kind of behind their back at this point. Something to think about. High level stablecoin issuer questions they always come up in bull markets. You know what I mean?
Yeah.
Every cycle, every bull market, every bear market, are they solvent? Where's the money coming from? Where's the money going? Are they complying? And that's the fun thing about crypto is we have no idea.
Yeah. Do you think that USDC is just like slowly becoming, government coin?
Slowly becoming the stable coin? I think so. If I had to guess what a US CBDC is going to look like, it's issued by Circle.
Yeah.
If Circle IPOs, that would be a banger.
You think so?
They're meant to.
Huh.
That's the word on the street. They were meant to do it before the bear, or during last bull market.
It makes so much sense
happened.
Why they would attack like USDT, because it's like that's such an easy way to earn money, and they want that company to be American.
Exactly.
The one that is the main stablecoin issuer.
100%. It's such a profitable business. They literally just take customer deposits invested in non-volatile asset like bonds or money market funds, and then, okay, go have fun with your crypto token, and we'll hold these assets forever.
Yeah.
Because nobody realizes that if you wanted to cash out in crypto, one of the most cost-effective ways you could do it is go to the stablecoin issuer. Instead of going through like Coinbase or whatever exchange you use, take your stablecoins, go to the issuer, and redeem them through a wire.
Yeah.
That's standalone the cheapest way of doing it compared to going through a centralized exchange, paying those fees. It's just go to the issuer itself.
I haven't done that yet, but I know that there are limits. Like you need to do at least $50K or something like that. It's like they can't just cash out $10 if you want.
I think to deposit through a stablecoin issuer, it's a minimum ticket size of 50,000. And then to withdraw, I think, is 200.
I see.
Yeah. So there is limits, but it is quite a bit cheaper to do it through that route. And then you can also say, oh, I redeemed stablecoin. That's not a word anyone's ever said before.
Yeah. Didn't sell. Redeemed.
Redeemed. Cashed in my coupon. The internet funny money.
So last time we spoke about the launch of the Pudgy Penguins token, Pengu, which was going live on Solana. And it immediately spiked to, what was it?
$14 trillion. Pudgy Penguins was almost worth as much as the total global supply of gold. It was worth about 4 times as much as Apple. And it was quite the debacle. I tried to snipe it. I got absolutely rinsed, but I'll run you through some of the turmoil that happened. So it was meant to launch 5 a.m. Pacific Standard. So me, a diligent sniper, wanted to be awake. Woke up 4:30 in the morning. No idea I probably just shouldn't have slept, to be honest, but hop on my computer. And for context, before the launch, there was 22 people holding the token. And so all of those 22 people got it from the developer wallet. And so you could probably operate on the assumption those are exchanges, market makers, team advisors, right? Those are the only people who should have the team early or have the token early. And the team took deliberate steps to seed the contract address on Twitter. Binance posted it in an article, and the Jupiter team tweeted the CA directly.
Oh wow!
So they seeded the snipers, right? Like they baited the snipers by making that CA available early. And then 15 minutes before the official launch at 4:45 in the morning, they launched the token early on Radium. And they did it with very little liquidity. So all of the snipers, there was about 10,000 of them, jumped in. They sent this illiquid liquidity pool to a market cap of $14.3 trillion.
Ouch.
It traded like that for 15 minutes. For reference, there was someone in my Discord community that successfully turned 10,000 US dollars into $3. Because at 4:59, they removed the liquidity, reset the pool, and then added in the normal amount. So effectively, they farmed all of the snipers. They made a lot of money off of trading fees, pulled the liquidity, and relaunched. I understand taking measures against snipers. That's totally understandable, and I think that is a pragmatic thing to do. What I think is unethical about this situation is how they purposefully left breadcrumbs for people.
Yeah.
Right? Jupiter tweeted the CA. Binance posted an article with the CA in it. The CA wasn't hard to find. But for them to do that and then farm the snipers within a liquid pool, and it had to have been a team or team adjacent person, right? Only 22 people had the token before the launch. So who was it that farmed? Because they made a killing. And so I think this story didn't really become too popular on Twitter because I think there is just kind of a sentiment of fuck snipers. Yeah, exactly. Like obviously the Pudgy Penguins is a very dedicated community. There's cheerleaders everywhere. And there is kind of this anti-sniper mentality. But regardless, I don't care that I lost my Solana. I understand that's a risk, but innocent people got hurt.
Yeah, there were a lot of people that just didn't have a lot of money and then just like saw it was live and it was live for way too long.
15 minutes.
And bought it like, I think the peak was like someone bought like $100 Pengu and they'll never get that money back.
Never get that money back. I have the transaction saved. I paid $18 for one Pengu token. People were trying to tell me that it was fake. I bought the wrong one. I was like, no, motherfucker, listen to me clearly. Look at this transaction. Right CA, the price. 10 minutes before launch. Don't tell me it's fake. Don't underplay my trauma.
I think it's bizarre that, they were obviously going to launch at a super high market cap. And so it's like, I think it's fine to have snipers when it's like that. You have like a ton of liquidity. It's like, what they really did is they took away all the price discovery because like even when they reseeded it, it came out at like, it was like $7 billion or something like that.
I think it was $6
billion. Yeah. And immediately just like started to nuke and, not great for early buyers.
Yeah, honestly, I'm in the camp that snipers are good for launches because it does what the team wants to do, make the token go up. Regardless of what happens when you launch a token, especially if it's going to be in multi-billion-dollar market cap that you airdrop a significant portion of the supply, it's going to go down. Like your chart is going to look fucked up regardless, so you might as well embrace how high it can go and how low it can go after. I don't know. To me, sniping is a part of the game, but the fact that they kind of set their community up for failure in that context seems a bit nefarious.
I think so too.
The right word.
Yeah. The good news is that the people who did have a large Pudgy got around like a $90,000 airdrop.
Yeah. It was, I think it was 108,000 tokens per Pudgy.
Oh, no, it was 1.7 million.
Well, oh, no, I was thinking of the little Pudgy.
Little Pudgy.
Yeah. So, I mean, congratulations to all the Pudgy holders. Substantial. Hopefully they sold already because the price action has not been too favorable.
Not been that great.
Price discovery to the downside is not what the Pudgy gang wanted.
I think it will have its time in the sun though. Like being listed on all these major exchanges like Binance, like they've got to pump it eventually.
What I think would be like such a better approach is they go for like, let's say a $500 million market cap at launch. And then you have price discovery to the upside, where the
Totally.
people who sell
Yeah.
early get punished.
Yeah, absolutely.
Instead, they went for a greedy valuation. And realistically, what was the point of that? Because now the market is finding the fair valuation to the downside.
Yeah.
But in reality, if they went for a low market cap, then you find the market deemed valuation to the upside, where it's a much more positive experience for most people.
Yeah.
I don't know. To me, I think those are just like the high level questions of how do you do a launch perfectly? And by and large, I mean, apart from Hyperliquid, by the way, trade on Hyperliquid, referral code DeFi Daddy. Apart from Hyperliquid, we really haven't seen what a perfect launch may or may not look like.
That's true. We do have some more airdrops coming up as like a bit of alpha. There is this one called Abstract, which is a layer 2 for Ethereum. If you are like a Pudgy Penguin or any of these like major NFT holders, like Azuki, you are entitled to some tokens. That one is coming out in January. And
yeah, I believe so. They're marketing it as like a normie-friendly L2, which seems like such a paradox because normies don't know how to use L2s. They don't know how to bridge. But it is coming. I believe Luca Netz is involved with that project kind of at like the high-level corporate environment. But Abstract, if you hold Pudgy, I'd imagine if you hold Pengu, if you hold Azuki, does seem to be having a pretty large airdrop for their community coming in Q1 2025.
Yeah, so something to look forward to, and has been bringing the price of NFTs back up a bit. Any other airdrops that you're kind of excited about?
Well, Hyperliquid will be having more airdrops in the future, so get using that app using referral code DeFi Daddy, of course, for cheaper fees. Grass is having more airdrops in the future.
Really?
Yeah.
Oh,
There's
man,
actually tranches to it.
Okay.
There's tranches to it.
Do the referrals still count?
Yep.
Okay.
Yeah, referrals still count. Other than that, there's one in the Hyperliquid ecosystem called like PvP.fun. It's kind of like what's it called? Not OKX. It's from Kyle and Zusu.
Yeah.
They have that few like.
Oh wait, PvP. Yeah, that's also within Hyper. I thought it was the Hyperliquid team because it like literally connects to their page.
So there's the PvP.fun, but I'm thinking of OX Fun. You know, like the Zusu Kyle Davies project where they trade futures on meme coins. There's that, but in the Hyperliquid ecosystem called PvP.fun. That airdrop's probably worth farming because it's going to be happening. Other than that, I don't think so. I feel like airdrops, the peak, the time to do them was like leading up to the March 2024 boom. I think that was when airdrops were peak farmability.
Yeah.
Because the people, if you got into the first wave of the Hyperliquid airdrop and you traded $1,000 in volume, your airdrop is worth more than $10 million.
Yeah, I mean, even I started pretty late on that one, and I still accumulated enough to get like a 50K like airdrop when it came out. And
too bad you didn't click the terms of service button.
I know.
That hurts.
It is what it is. I honestly didn't dwell on it, but I know some people were like borderline suicidal because they literally left $1 million plus. It was something like 27% of people didn't sign it. Yeah, I feel like it was a bit nefarious on their part because I was on the app screen like every other day, a couple times a week. Not once did a notification pop up.
Oh, really?
To sign it, you had to go to a whole separate page. And unless you're like really tuned in and like on their Discord looking at all the messages, like you were gonna miss it.
It'd be easy to miss.
27% is quite a lot of people who are missed out on it.
I hope that 27% gets redistributed to future rounds, though.
I'd hope so, but then there's people who invested in Hyper and they're like really against that. They're like, that money's been allocated already, and they're like really adamantly
like, burn it.
It's like typical like cult mentality.
Yeah, we've got our bag. Don't give anyone else any food.
Yeah, even though these are like some of the early supporters who like, even though you received the was it per? Yeah, even though you received the per airdrop and you didn't sign anything, like you missed out on the actual airdrop.
Criminals, man.
I mean, it is what it is. I don't. I'm not going to hold their feet to the fire about it.
Shall we wrap up?
Yeah, sure. All right, that's it for episode 2 of Exit Liquidity with DeFi Daddy and DeFi Senpai.
Thank you so much for tuning in. Today is December 30th. We will catch you in 2025. Take care, everyone.
Peace.